Right now, as you're listening to this, 3 of your competitors just gained a $47 million advantage. Not through a merger or acquisition, but by unlocking hidden value trapped inside their legacy core banking systems. While most banks are still debating digital transformation, these institutions are already capturing millions in operational efficiency, customer retention, and new revenue streams that were sitting dormant in their existing infrastructure. I'm Victoria Chen from Advanedge Consulting, and today we're revealing the exact playbook these forward-thinking institutions are using to transform their core banking systems into profit engines. This isn't theoretical. This is happening right now, and the competitive gap is widening every single day. The financial services landscape has fundamentally shifted. Digital-first competitors aren't just offering better user experiences. They're operating with cost structures that traditional banks simply cannot match using legacy systems. A digital bank can process a transaction for pennies, while your legacy system costs dollars. They can approve a loan in minutes, while your workflows take days. They can launch new products in weeks, while your institution takes months. But here's what most banking executives don't realize. The solution isn't replacing everything. It's strategically modernizing what you already have to compete with the efficiency and agility of these digital native institutions. The banks winning this transformation aren't starting from scratch. They're unlocking the hidden potential in their existing core systems. Let me share what we're seeing across the institutions we work with, because the patterns are both alarming and incredibly revealing. Most banks are sitting on massive untapped opportunities, but they don't know how to identify or capture them. First, there's the efficiency gap. We recently worked with a community bank that was processing loan applications through a system that required 17 different manual touchpoints. 17. Their loan officers were spending 60% of their time on administrative tasks instead of relationship building and deal origination. They knew they had a problem, but they didn't realize they were hemorrhaging approximately $3 million annually in operational inefficiency alone. Second, there's the data disconnect. Banks today generate enormous amounts of customer data, transaction patterns, risk indicators, behavioral insights, but most of this intelligence is trapped in siloed systems that can't communicate effectively. We worked with a regional bank that had complete customer profiles scattered across 6 different platforms. Their relationship managers were making decisions with maybe 30% of the available customer intelligence. They were leaving millions in cross-selling opportunities on the table simply because they couldn't see the complete picture. Third, there's the integration bottleneck. Every new fintech partnership, every digital service, every regulatory requirement forces banks to build custom integrations with legacy systems that weren't designed for this level of connectivity. One institution we helped was spending $400,000 annually just maintaining integrations between their core system and various third-party services, and every new integration increased their operational risk and compliance complexity. But here's the most critical insight. Banks that understand these gaps aren't just fixing problems. They're creating competitive advantages that generate measurable returns. The $47 million opportunity I mentioned isn't hypothetical. It's the combined value we've helped institutions unlock through strategic core banking modernization over the past 18 months. Now let's talk about how AI, blockchain, and digital payments are reshaping not just customer expectations, but the fundamental economics of banking operations. Artificial intelligence isn't just a buzzword in modern banking. It's becoming the operational backbone of competitive institutions. AI-powered systems can process loan applications, detect fraud patterns, predict customer needs, and optimize cash management in ways that would require armies of analysts using traditional methods. But here's the challenge. Most legacy systems can't effectively leverage AI because their data isn't structured for machine learning algorithms. The institutions winning this transition are implementing AI layers that can communicate with their existing infrastructure while dramatically improving decision-making speed and accuracy. We worked with a bank that implemented AI-driven loan decision engines alongside their traditional underwriting process. They reduced approval times from 5 days to 4 hours while actually improving their risk assessment accuracy. That's not just efficiency, that's competitive differentiation. Blockchain technology is solving trust and transparency challenges that have plagued banking operations for decades. While most banks are still viewing blockchain as experimental, progressive institutions are using distributed ledger technology to streamline everything from trade finance to regulatory reporting. The ability to create immutable audit trails and reduce counterparty risk is generating real value today, not someday. Digital payments represent the most immediate transformation opportunity. Consumer expectations have permanently shifted. They expect instant transfers, seamless mobile experiences, and 24/7 availability. But beyond customer satisfaction, digital payment capabilities are creating new revenue streams through transaction fees, merchant services, and embedded finance opportunities. Now, here's where core banking modernization becomes critical. The big three core providers, Fiserv, Jack Henry, and FIS, serve approximately 70% of U.S. banks. Each of these platforms offers powerful modernization pathways, but success depends on strategic implementation that aligns with your institution's specific competitive positioning and growth objectives. We've seen banks achieve remarkable results by strategically upgrading their core infrastructure to support modern API architectures, real-time processing, and cloud-native services. This isn't about replacing everything. It's about creating bridges between your existing investments and the digital capabilities you need to compete. For lending operations specifically, we're seeing institutions dramatically improve their competitive positioning by implementing modern loan origination systems like Abrigo. These platforms streamline lending workflows, accelerate decision-making, and provide the kind of borrower experience that today's credit markets demand. When properly integrated with modernized core systems, these tools help institutions make faster, smarter lending decisions while maintaining rigorous risk management standards. The transformation patterns we see across successful institutions follow a clear progression. They start by identifying their highest impact bottlenecks, usually in loan origination, payment processing, or customer onboarding. Then they implement targeted modernization that addresses these specific challenges, while creating a foundation for broader digital transformation. So how do you actually capture this opportunity? Let me share the practical implementation framework we use with our clients at Advanedge. First, we conduct a comprehensive core system assessment that identifies specific inefficiencies, integration challenges, and untapped capabilities within your existing infrastructure. This isn't a generic audit. It's a strategic analysis of where your current systems are creating competitive disadvantages and where targeted improvements can generate the highest returns. Second, we design integration strategies that connect your modernized core capabilities with best-in-class fintech solutions, whether that's payment processors, lending platforms, risk management tools, or customer experience systems. The key is creating seamless data flow, operational efficiency across your entire technology stack. Third, we navigate the regulatory complexity that makes many banks hesitant to modernize. Compliance isn't a barrier to transformation. It's a framework for implementing changes safely and sustainably. We help institutions modernize their core systems while actually improving their regulatory reporting and risk management capabilities. Fourth, we implement change management processes that ensure your team can fully leverage new capabilities. The most sophisticated technology won't create value if your people can't use it effectively. We work with institutions to develop training programs, operational procedures, and performance metrics that maximize the return on modernization investments. The banks that are capturing this 47 million opportunity aren't necessarily the largest institutions. They're the ones that recognize that digital transformation is an operational imperative, not a future consideration. The future belongs to financial institutions that understand this moment in banking history. We're not in a gradual evolution. We're in a fundamental restructuring of how banking services are delivered, priced, and valued by customers. The institutions that adapt their core systems to compete in this new landscape won't just survive, they'll thrive. Legacy systems aren't anchors if you know how to transform them into competitive advantages. The question isn't whether your institution needs to modernize. It's whether you'll lead this transformation or be forced to follow it. The window is open, but not for long.